The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Thank you for being with us this evening, and good morning to our friends in Australia and New Zealand. I think it's actually just gone 12:30 in New Zealand. I'm never quite sure because they have daylight saving. Most of Australia has daylight saving. We don't have daylight saving in Queensland, but most of the rest of Australia does. So it's just totally confusing, but doesn't really matter. And lovely to have you with us today. Let's see, how's the volume, folks? Can anyone hear me all right? Just type in the questions box, would you, and tell me that you can hear me. Yes, Chris is right on the ball. Chris is a new tutorial guy. He's doing a great job. But Terminator, Paul, yes, thank you. Everyone can hear. That's great. That's great. And Rose, hello, Rose. Anyway, greetings to all our normal friends who are with us today. We have a great crowd of loyal supporters. Alan Varian up there in Brisbane, thank you for being with us. Alan, Alex, Andre, Anthony DD up in Chicago. Chris, we've talked about and welcomed. Harold, the gold bug from Reading. A great friend of mine. Let's see, John Chiwa is a new one. Nice to have you with us. John Manish. Manish is an Indian gentleman. I've just finished doing my first tutorial for an Indian gentleman. Very interesting how they've got to trade in India. They have much the same these same charts as we have, but they're expressed in rupees and they're slightly different, only slightly different. They really make life hard over there because of their capital controls. Mark, he's a tutorial guy. Mike, the mad dentist from Chicago, Mike Mitzlis, he was a good trader when he came to me. He's a super trader now. Good to see you with us, Mike. Mr. Michael, the program coding friend of mine down in Melbourne. I don't know how you managed to get on here today, Michael. You might be getting the day off at work. Mike Murphy, another tutorial guy. Mike Olenek, another one. Tutorials, all these guys. Lovely to have you with us. A couple of Phillips and Rose. We always have to particularly say hello to the ladies. We don't have a lot of ladies, and we'd like to have a lot of ladies. Rose is just about probably better than halfway through her tutorial. She's pretty amazed by it all. We might be able to get her on to talk to us about it. Tom, nice to have you, and Trevor Kent, of course. Great to have you with us all, folks. Okay, today's webinar is why futures, and we've got some interesting things to talk to you about. It's interesting to me that futures is such a small part of the trading markets, which are totally dominated by stocks and shares. The great unwashed all seem to gravitate to investing or trading in stocks and shares. That's the elephant in the room. Futures is a very, very small fraction of the trading, as is Forex, although it's big in certain countries. It's a cultural thing, Japan. And futures is very much a US-centric product. It's futures basically invented by the Americans in the wheat farmers in the Midwest, grain farmers. It's the central exchanges for it are in the US, and there's a degree of promotion there, nothing like what it should be. And the rest of the world's pretty abysmal about it. In fact, you take where I live in Australia, which is supposedly a fairly modern, enlightened country. No futures here. They all trade stocks and shares. They've been trading hybrids provided by largely based on the shares of the big four banks, where they have a protected status here. We don't have competition against our big four banks, which is really stupid. They have contracts for difference, a lot of that going on here. Believe it or CFDs, and believe it or not, much excitement from the Australian Stock Exchange. They're going to introduce ETFs. I mean, for God's sake. And the commentary was, well, these may not be much good because they're easier to sell. And during the 2007-2009 crash, they went down by a lot. And that's like, God, we can't have that. So really what the population's looking for is um, they're happy with a small return. They're hoping for 7.5%, 8%. That 7% sort of much the benchmark for pension funds. They don't want any risk, and they expect to get this without any education or any effort. And I think that's why the market and the involvement in futures is so limited, because you have to know what you're doing. The big thing about futures is it's leverage. You can trade both ways. It's just as easy to sell as to buy. You get paid going up and going down exactly the same, but you really have to know what you're doing, because the leverage is a two-edged sword. One of my good friends and good clients, who's a vice president at Wells Fargo, got a lot of clients invested in stocks and shares, and he sat through the whole of the 2007 to 2009 crash with his clients, committing suicide, some of them jumping out of buildings, ringing him 10 times a day, what's happening, what's happening, what's happening, when's this market going to bottom? And when it finally did bottom at 666, as I'd been lucky enough to forecast, and the right day, the right time, he was so ecstatic. And I didn't have the heart to say to him, what the hell are you ecstatic about? You put your clients through 2 years of hell and misery, and who knew this was the bottom? I mean, when I predict the bottom, it doesn't necessarily mean it's going to turn. It means that that's support or resistance, and that the time cycles are there, the price is there, but we have no foreknowledge. In my view, it's not a great thing to be sitting through a big pull down. In fact, a pullback of any sort, in my view, is a trading opportunity to be short. But the rules of trading stocks and shares are so skewed that it's very, very hard for the average person to get short. But I want trying to explain more to you about why futures. The biggest thing holding people back from trading futures is, as I've said, you do need a pretty high level of skill, and people aren't prepared to put in the effort to learn about trading futures. And there's a number of different levels. You can just start on the Daniel Code website, get some directional signals, learn to trade those, improve your skills as you go along, and when you're ready, you come to a Daniel Code tutorial, and I'll teach you how to be in the markets all the time, and I'll teach you how to trade time as well as price. But one of the things, Sister Sage has arrived. Hello, darling. It's about time we had a chat. God, I haven't seen you for so long. And the great Mustang man from across the ditch, as we call the Tasman Sea between us and New Zealand. Mrs. Needham and Bodie are on their way over to your country, Sage. They're going to their niece's wedding down in Christchurch. I've just dropped them off at Coolangatta Airport, so they probably haven't even left yet, but they're the lucky ones. Love New Zealand, fabulous country. Anyway, there's Sage, one of my great friends, and one of the best traders we have. And Janet's just joined us. Hello, Janet. Nice to have you with us. Hope your ankle's healed and you're feeling good. Anyway, we're privileged today to have one of my students with us. And this is a lady whose name is Merrilyn. And Merrilyn's got a really good story. She's been working her way through the Daniel Code video tutorial. And she didn't know anything about futures trading at all, which is why I thought you might be interested to hear her story, because she's at this stage, she's doing a paper trading. From here, the next step will be to push on to trading electronic markets, getting a handle on how to do that, place orders and stops on these electronic platforms, which all have their own quirkiness. All of you will know that I'm a confirmed Luddite. Hate all that stuff because I don't understand it, but you can learn. And I wanted Merrilyn to tell you a story. So good to have you with us. Merrilyn, can you hear me now? Hello. Let's see, we got Merrilyn.
I can indeed. Can everybody hear me?
Here you are, Merrilyn. Welcome. This is Merrilyn, ladies and gentlemen. She's a Australian lady who's doing a tutorial, and I wanted you to tell the folks about your experience, Merrilyn, starting with your basic knowledge of futures before you came to me, which I think was pretty close to zero, and what attracted you to it and why you wanted to trade futures. So over to you for the moment.
Thank you. I'm happy to tell everyone my story, and hello to everyone. Good morning and good evening to all those everywhere in the world. My story is fairly standard, really, I think. I had a background in media sales and marketing, which kept me fully occupied, and one of my great interests in life was the stock market. I read some books, did some basic courses, I wasted some money, and I became sad and sorry, frustrated and disillusioned about the possibility of ever becoming a competent trader. And then one day, via the internet, God knows it's a wonderful thing in our lives, I came across John Needham and the Daniel Code. And for me, this was a life-changing experience because it offered me the opportunity to learn a skill which had hitherto eluded me. And I found someone who was willing to share his skill, knowledge, and help me gain some of those very same skills and knowledge. But I must admit, I watched many video presentations before I came to the conclusion that the only way forward was to do the Daniel Code course. And about 5 months ago, I bit the bullet, as they say. One reason for my hesitation was that I'm not very computer literate. I wasn't confident about my ability to grasp a different way of trading, but what I can say now is that it's been a tremendous learning experience, and from the very first lesson. John has a wealth of knowledge, experience, which he willingly shares with students, and he's endlessly patient and persevered with me until I got it, which is just fantastic. I'm now completing the paper trading part of the course, and what this has taught me is that the Daniel Code works. What you need to do is learn the rules and practice until you become comfortable and confident that you're applying the rules as you've been taught. And paper trading gives you real life examples of what markets do on a daily basis. Sometimes it's frustrating, sometimes it's glorious, but it's always fascinating.
Yeah, it's a great game, isn't it, Merrilyn? Now, I just take you back a bit. When you first came to me, as I recall, you didn't know anything about futures, and I think before we even started on our regular tutorial hours, we had a couple of sessions just trying to explain to you what futures were and where you'd place your buy order, what a stop loss was, and looking at some of the markets. So you were really a complete novice when you came to me, is that right?
Absolutely complete novice, and probably I'm not alone in thinking that futures is a scary kind of a thing, but with your help it's no longer scary.
Yeah, and you see, the good thing is you're one of the very lucky ones, Merrilyn, because you knew nothing about futures trading when you came to me. One of the other lucky ones is actually on this call, sitting at her desk across the Tasman in New Zealand, and that's Sister Sage, whose name is Glennis. Her husband, Mustang man, whose name is Daryl, was the second person I ever taught the Daniel Code to, so many, many years ago. And Sage wasn't that long after him, and I think Sage has been to 6 or maybe even 7 tutorials. And she started where you've started, and I can tell you, she is one of the very best traders we've ever had. You know, it's no negative to know nothing about futures. If you think you know a lot about futures, we spend the first lesson trying to prove to you that everything you know is wrong, because the Daniel Code is so different to everything else you've ever learned. It doesn't stand on the shoulders of any other trading thoughts or ideas. It's completely unique to itself. And it's a total Swiss system. And particularly when we start talking about time, which you've been learning, Merrilyn, you're
Yes.
actually trading time
Yes.
in your paper trading. Now, folks, a lot of people boo-hoo paper trading. I'm the opposite. I'm a mad fan of it for students because by trading, and I mean, pretty extensive, trade a whole year at a time in a market, then move on to another one, you burn into your brain to see what the Daniel Code signals are. The rules become part of your subconscious. Markets actually are trying to tell us what they're doing all the time, but we don't understand because we don't speak marketese. We don't speak market language. And the Daniel Code is market language. It's the DNA of markets. And when you learn this stuff, you will see what markets are doing, and you'll know exactly what to do. How the Daniel Code works is that for every bar that's completed, there is a definite rule and a definite step that you're required to take. Doesn't mean anything might happen. You might have a buy signal, but it doesn't get elected. That happens all the time. The other thing that happens, isn't it, Merrilyn, because I say this to you a lot, is sometimes we have to say, I was right and I lost money.
Yes.
Because what happens with the Daniel Code is you will be right all the time, 365 days. In fact, it's market trade for 256 days of the year. You will be right every single day, but sometimes there's just not enough volatility for the market to move away to give you a profitable exit. And when that happens, we say, I was right, but I lost money. And that's part of the cost of doing business. So, Merrilyn, let's tease these people a bit with, because they've heard me say it occasionally, but it'd be nice for them to hear it independently. Tell these people, if you can lay your hands or just memory, I know you've been trading natural gas for the whole of 2016. Do you remember what your results were?
I believe it was in the low 40s.
1,000. 1,000.
Yes.
Low 40,000.
43, 44,000.
That's right. And that's on a margin.
Unbelievable. Absolutely unbelievable.
Yeah.
If you hadn't done it and hadn't seen it, nobody would believe it.
Yeah, there you are. And that's on a margin of 2,750, which is something like 1,500%. Now, of course, you're not going to get that in real life because that doesn't involve slippage. It doesn't involve brokerage. It's never the same. But, if you think you can get 50% of those sort of returns, you're probably
too bad.
You're one of the best 50 or 60 traders in the world. Don't worry about anything else. I have actually never heard anyone say that those sort of returns are even possible. And we're doing that all the time. I'm doing it all the time. And since I've been teaching some people to trade time, the ones who are trading time, and you're just trading time in these spreadsheets, Merrilyn, aren't you?
That's correct, just time.
Yeah, time signals, because time creates its own complete suite of signals. You're in the market all the time, every day. You're never out of the market. You might get stopped out and not be back in maybe 2 or 3 days a year, but basically you're in the market 99.9% of the time. And it's the volatility in the market by being with the trend all the time that makes the big money. Now, is there anything else you've traded? You finished trading your spreadsheets on, Merrilyn? Did you say you did gold?
I haven't finished gold. I'm about halfway through, and so I can't give you a figure.
What's
but
the
I
other
did
one?
palladium.
Well, palladium.
Palladium.
Yeah, palladium, yeah.
That was high 50s, about 58,000.
Yeah, it's the very best trading market, isn't it? Now we've told
Unbelievable.
Now we've told too many people. There you are.
Yes.
Sage is a bit of a gun on palladium, so she'll be kicking me. At least
Yes, I'm sure she will.
Not across the table from her, but I trade palladium. Sage does so to a lot of our tutorial students. Unbelievable money, what do you say? But I've alluded to these things, but I really want our folks to hear it from someone else. I want them to hear that you don't have to be frightened of learning, that I'm not going to bite your head off. You do have to pay me a substantial fee. My fee is for some time. Yes, Sage says our secret, lol. Well, it was. I'm sorry, Sage, I put my footnote there. You're going to have to pay me a fee to learn all this stuff. It's $7,500 US. I can arrange some terms for you if that's a bit heavy. Don't be frightened. Take the plunge. The real appeal from futures, as Merrilyn's been talking with you about, you can make more money off a small base than any other legal activity that I know about. And I've been an attorney for almost 50 years. There's not much I don't know about. Yeah, they said shut up about it. That's right. Sorry, darling. You can make, that's the real appeal of futures. If you can be a really seriously top 1% or 0.1% in the world trader, that's the sort of level we're talking about when you've learned to trade time. You can make more money trading futures than any other legal activity that I am aware of. And, if that's not an incentive for you, nothing is. Anything else? Thank you, Merrilyn. You've been absolutely grand. Anything else you'd like to add?
I'm really looking forward to all future possibilities. It's just, it's a life-changing experience, and I'm beside myself with excitement and the endless possibilities that the Daniel Code way of trading offers. What more can I say?
I love it. You don't have to say anything else. That's grand. Thank you for your time with us today, Merrilyn. Love that.
Pleasure, and I'll unmute.
Mute yourself, and we'll continue with everyone else. Thank you for being with us. So I hope you enjoyed that, folks. She's a lovely lady, Merrilyn. Here we are. Let's move on now. The next thing I want to talk to you about, lead you into, is a guy called Jesse Livermore. I've actually done a webinar on Jesse before, and he's a interesting character. He was a great plunger. He's called the Great Bear of Wall Street. Let me make sure your screen has changed so that you're on the same page as me. And a fascinating character, made and lost fortunes, real fortunes. And everyone's got very bearish all of a sudden. Everyone's waiting for the crash, the crash, the crash. When's this going to win? What's the top? When's it going to crash? Well, I don't know. I don't know what markets are going to do tomorrow. The good news is you don't need to know. All you need to do is follow the rules of the Daniel Code, and we'll get you short very early on. We'll get you the right way. You're always the right way at the Daniel Code. But I thought this would be an interesting thing to refresh you folks, because we won't spend too long on them, but everyone's sort of got crashes in their minds at the moment. So here's some salutary lessons for you. This guy was worth supposedly $3 million in 1907. He lost almost all of that. He violated his key rules. He listened to other people. How would they know that? I don't know. He came good again, and he was seriously a very wealthy man. He owned a series of mansions around the world, fully staffed with servants. That would be nice. A fleet of limos, a large yacht that got himself across the Atlantic. He married a Ziegfeld Follies showgirl when he was 41 and she was 18. Nothing wrong with that. Albert enjoyed hearing you speak, Merrilyn. So that's great. I thought about a little different approach here. One of my students. We've got many others. I might talk a few others to come in and speak about their experience. Then he became really famous for his shorts, selling in the great crash, the Wall Street crash, 1929. Then, guess what? He lost all that money. 32, the Ziegfeld Follies chick divorced him. He married another lady. All four of the previous husbands had committed suicide. I mean, I'd have thought that was a warning for a smart guy. What has been is and will be again. And 2 years later, he went bankrupt again. And a few years after that, he shot himself. Okay, and what was Livermore's great game? Here we are. A lot of this makes sense. All through time, people have basically react the same way. The stock market is never obvious. It's designed to fool most of the people most of the time. Well, all markets do that. That's the name of the game. Markets, futures markets, love to get 99% of the people wrong, and that's when it rewards you. I always like this quote particularly. The game of speculation is the most uniformly fascinating game in the world, but it is not a game for the stupid, the mentally lazy, the person of inferior emotional balance, or the get-rich-quick adventurer. They will die poor. Jesse was none of those things, but he died poor. And the reason he died poor is his belief of holding trades. His main saying was, you make your money in the long pull, by which he'd invest money and then he'd keep pyramiding, he'd keep adding to whatever his position was. And we know he was hugely successful, but then lost it all. The name of the game is not to have big losses. The name of the game is to let your winning trades run and cut your losses short savagely. And he acknowledges that the only thing to do when a person is wrong is to be right by ceasing to be wrong. Cut your losses quickly. Jesse didn't do that, and he probably didn't even know how to do that. But if you learn how to trade time, you'll see some amazing things. You know, everyone likes to trade their home market. I get frustrated with people. Americans all want to trade the S&P. Australians want to trade the SPY. Indians want to trade the Nifty. Hong Kong people want to trade the Hang Seng. It doesn't matter. All markets work exactly the same. Some are technically better than others. The Hang Seng, honestly, for such a progressive country as Hong Kong is now part of China, of course, but an enormously progressive country, huge technical skills. Would you believe their main index, this is the main index on the Hong Kong Stock Exchange, it's called the Hang Seng, they don't have after-hours trading. They have regular trading hours, which is why this market is full of gaps. All those green dots you see on this chart, it's full of gaps. But you can see that just simply a basic knowledge of time, you get every top. This runs from the whole, this is for the whole of 2017. You get some of the bottoms, but if you change your time cycle for the bottoms, you don't use the same cycles going both ways. In a strong upward trend, the time signals will give you tops. You need a reasonably strong downward trend to get buys, and if you don't have that, you need to use a shorter time cycle. But look at that chart. You've got every significant turn you needed to know, and the question mark is one that you didn't get a buy signal for on the time cycle this chart's using. But of course you got that buy signal on a shorter time frame. This is the Nifty in India. It's the same, got the same problems. Look at all these gaps on it. An enormously computer literate country, you know, one of the great growing democracies in the world. It doesn't have an after hours trading session. So this is just the floor session. This is actually the Nifty 50, as they call it, the 50 largest corporations listed on the exchange in India. And I've just actually done the first tutorial with Manish. He's a very, very savvy Indian guy and wants to trade the Nifty. Those of you might notice I'm doing signals for the Nifty just for the moment. I don't normally do them because we don't have a big enough Indian clientele. But Manish is actually the first Indian gentleman who's done a full tutorial with me. And it was fascinating, and I think he's amazed. And we might even be able to get him on to talk to you at a future date as well. But you can see here the point I'm trying to make to you. The reason I put up the world map, or Terry rather put up the world map for this webinar, you can trade futures all over the world and they all work exactly the same. If this chart looks kind of the same as the one you just saw, for Hong Kong's Hang Seng? It's because it is. All financial markets work exactly the same if you have a system that truly is focused and precise on selecting market turns. And it's the turns and then what follows from them that makes the money. Let's have a look now and move on. This is really interesting stuff, and it's going to take you some time to work through this. This is US T-bonds, and these are a few of our recent trades. And I want to take you through what's happening here so you can see. The obvious thing is that we had a sell signal. It was a blue line and a TO3 sell signal right at the top of this chart, just exactly the day you wanted it. That trade was elected and down it went, and it's down for 4 or 5 days. Then you had this tiny little rally, 1 bar up. Then it went down again. Then you got another rally, which was 1, 2, 3, 4 days, a 4-day rally. Very unusual. And then down it went again. Wednesday's bar down was about $1,600 in 1 day. Very, very nice. Have a look at what I put in the box, in the red box on the top, and don't take it literally, please. This piece of chart here is actually 14 days of trading, and there's 3,400 odd profit in those 14 days from the Daniel Code trade signals. Now, this doesn't include slippage, this doesn't include brokerage commissions, so this is just for example, if you like. So that's $3,400 odd profit in 14 days. Now there's 255 or 56, depending on the year, trading days in a year. So you can annualize that. That's 62,000 for a year. And this has a margin of 3,300, which is actually, in my view, very high. But nevertheless, that's what it is at the moment. And that's 1,900% on margin. Okay, now, a couple of points. Of course, you're not going to get that. You're going to have slippage. You're going to have commission. Everyone's paying too much commission. Talk to your broker about it. But if you can even get 50% of that, you're going to be one of the handful of best traders in the world. And the Daniel Code does this all the time, every day. And I keep teaching people how to do this. And we have numbers of people who are doing their paper trading or are past it, who are actually back to trading real money again, and they're getting outstanding results. So don't hold me literally to those. Those figures are literally correct, but I'm not suggesting that's what you'd get in a year of trading. You've got to be very careful what you say on these shows, because I tell you that this will be a target, and then I get a abusive email from some idiot in Europe saying, oh, it's gone through that, you don't know what you're talking about. Well, I don't. All these targets that we try to create for you are just support and resistance. Doesn't mean it's the end of the world. We don't have foreknowledge. And in the same way with this chart. But I want to take you through this chart because there's a lot of stuff on here that's really, really important. And you need to see it in some detail. So let me get my spotlight so you can see what I'm talking about. On this chart, the blue lines and the red and black lines, these are Daniel Code numbers. One of the things that Jesse said is you have to know the numbers. And the only points of valid support and resistance that you'll ever see on a chart are old highs, old lows, and Daniel Code numbers. And these numbers, folks, they're lethal if you don't know it by now. If you don't have these numbers in your trading, you are losing a significant advantage. You are doing yourself a disservice. So let's just run this through in a little bit of detail because this is very important. So this bar I have the highlighter on now. This is September the 8th, 2017, and we had a blue line and a TO3 signal. And down it goes. The trade's elected. A bit of a gap there, was pretty enthusiastic, wasn't it? And down it goes. It roars down. Doesn't tell us much the first day down. Look at the second day down. Now we've got to, this is September the 12th. This bar closes at 155.07. Look at the blue line on the right-hand side of the page, 155.06. Okay? Target recognition, as we call it, is valid at the bar high low or on the close. Now, target recognition doesn't mean the market's going to turn. It's the first of a number of conditions that are required to have a market turn. In this case, the rest of the conditions are not met, but we have target recognition. So what this market is saying to you is, I know these numbers and I'm tracking them. That's the big thing. This market is speaking to you, but you just don't know it. Look what happens with the next bar. Okay, move on one bar. This is Wednesday, September the 13th. Where's my cursor gone? Here it is. I've got the highlighter on here. This is it here. This market makes its low, the low of this bar, 154.24. Okay, that little arrowhead you see in the numbers over on the right-hand side where I've put the Daniel code lines on, that's called a karat. And it's an old-fashioned thing that started with the grain traders out in the Midwest, was carried on. It's still used today by the old CBOT, Chicago Board of Trade symbols, and they've merged with the CMEs a few years ago, but they still like to use the karats, and the karats are all function of the rule of eighths. And if you do a tutorial, I'll teach you. You'll teach yourself, in fact, where the rule of eighths actually comes from. And this market actually happens to trade in a multiple of 4 eighths. There's 32 ticks, or numbers to the right of the karat. There's 32 of those in each point. Okay, so look what this low is. 154.24. And look at the number to the right-hand side in red, 154.24. Absolutely perfect target recognition. Just bear with me 1 second, folks, if you would, please. And I'll tell you what I'm doing in a moment, if you excuse me. I'm actually doing a text, and I hope you're very impressed, because I haven't I haven't always been able to do this, have I, Sage? Anyway, my kids taught me to text, and I do it very slowly and hardly ever, because I have a mobile phone that's rather wonderful. I bought it for $48 14 years ago in New Zealand. It's a Nokia. It's very good. You can take phone calls, make phone calls on it, and you can actually send and receive text. And as I say to my children, that's actually what phones are for. They all, of course, have iPhones. I don't understand any of that, but filling in my rudeness, for which I beg your indulgence, my wife and children, my wife and daughter, are on a plane going to New Zealand for their niece's wedding down in Christchurch. So they just texted me to say they're on the plane and heading off. So I took the opportunity to wish them a safe trip. So I thank you for your indulgence. Okay, so look at this target recognition, 154.24 against 154.24 is the low. The number there, 154.24. Okay, zero variance. Fantastic stuff. Again, this market is saying to you, I know these numbers, I've got it, I'm tracking them. Okay, look at the next bar, move on. This is September the 14th. You may think I'm taking an inordinate time about this, but I go through this stuff and I don't think anyone's really paying a whole lot of attention to it. There's actually a blue line there that's not on this chart because it's done on a different computer at 154.16. And the low of this bar is 154.12. And that's what spun it around. Let's move on to the next bar. We get here we are, down it goes. This is, get that centered for you. This little bar here is 1, 2 down. This is 0919, and this doesn't tell us much at all. It just sort of continues the down move. There's no target recognition there. Let's move on. That's okay. Don't have to panic. It doesn't do it on every single bar. Here's the next bar. This is September the 20th, and here the low is 153.16. Okay, look at the blue line, 153.15, one tick variance. This is a number at 153.15, and there's 32 ticks in each point. So for this number here, at what am I getting excited about? We're getting excited about 153. That's about 5,000, close enough to almost 5,000 ticks available in that number. And we're talking at a variance of 1, 2, 0, 3, maybe 4 ticks. This stuff is just so accurate, it's scary. Now, not all markets are like this. Forex is not as exact as this, and there's a couple of reasons for that. You Forex people will know. There's no central exchange in Forex. The prices are created by the banks that are providing liquidity to each platform, and there are differences in prices between different platforms in Forex, whereas in futures, everything comes through a central exchange, so we all get exactly the same numbers. Again, not all markets are as precise as this. This is technically a very, very accurate market. The bigger the market, and this is the big daddy of them all, this is US T-bonds, 30-year bonds, it's very, very accurate. Okay, so it's still saying to you with this bar here, here was our low, 153.16 against 153.15. One tick variance out of possibly thousands. Okay, then here we are. The market starts to rally. There's a buy signal here, a TO3 buy signal. The market rallies. First day up, it closes at 153.30. Look at the red line, 153.29. Now this chart, all these numbers have been available on the members' website. These are members' charts published twice a week. A lot of you have seen these numbers. They're not something I made up for today. Then the market goes up and it rallies. Here's the next day up. This is the second day up. What have we got here? We've got a close at 154.12. Look to your right. There's a red line there, 154.10. Okay, that's actually the wrong way. This is from a high to a low, but it's still tracking these numbers. Then you get this bar up here, and it has a high of 155.04. There's a blue line there, again the wrong way. That's a downward blue line, but the market recognized it from the other side, 2 ticks away, and that's all. Okay, then we had a sell signal, a plus sell signal. The thing about the plus signals is they have a degree of time in them, as do the TO3 signals. This is a very, very hard trade to get. So what you've had basically is you've had three bars, 4 if you count the red bar, the inside bar. You've had a 3 or 4 bar counter trend. But you've had more than that, as I'm going to show you what made this trade so hard to get. But we did get it. It was a plus signal, down it went. And it knocked out about $1,500 in one day. Very, very nice. So this is a hugely dramatic move. Look at this, biggest bar on the chart, biggest down bar on the chart. Look where it ends. Okay, it just charges down. The low's 152.24. Why has it stopped there? Because there's a Daniel code blue line at 152.25. Okay, what happens the next day? Today, down it goes, spins around, rallies back up. The low today, 152.01. There's a blue line at 151.30. Okay, that's only 3 ticks away from the low. 151.30. The next number is 151.31. Next number's 152. The next number's 152.01. It's just 3 ticks away. Okay. It's pulled up and got all the way back to close, somewhere near yesterday's low. Very important that you understand how this stuff works, because if you don't, you're not getting the most benefit out of it all. This is T-bonds with the, instead of looking at price, which we've been looking at on the previous chart, this is T-bonds. This is the whole T-bonds chart from the rollover. You can see at the left of the chart, it's very gappy, lots and lots of big green spaces. They're a device that Trade Navigator uses. Yes, sage 3 up and a hook. That's right, and also a time signal. They're what Trade Navigator uses to fill in with a lot of these future charts. There's no previous trading history at that period until it becomes the front month or near the front month. It starts to fill in. So you can see using trading time signals, which is just the hot new thing, you get every high and every low and every turn. I also teach you how to manage the trading in between. But there are 2 trades here that are very, very hard to get. One of them is the outside bar, the grey bar I pointed to, which is September the 1st. And that gave you a time signal 3 bars earlier that was not elected. And there was no price selling signal, no hook trade, no nothing else to set this up. It was purely a signal on time. Okay, let's going to have a closer look at this fellow over here. Gosh, my computer's darting around doing this and that. Let's go to this bar here, this trade up into 925. This was pretty hard to get, and I'll show you why. Here it is. So down it went. We've been short. We had a little one up, one down here. We only lost a few $100 on this trade here. We make money everywhere else. Down we come. And on at the low here, this is 0920. We have time and price. We have a buy signals. We have a TO3 buy signal. The trade's elected the next day, which is 0921. And then the next bar is 0922, Friday, September 22. And I have an arrow there saying trend is probably up. Believe it or not, we can start to tell trend that soon. And the difference between a change in trend and a correction is significant for risk, very significant. One of you was asking, Akshay, I think, was asking about risk. I'm probably not going to get through it today, Akshay, but one of the most important things is risk. We can manipulate risk. And when we're with the trend, we'll take our normal commercial level of risk. When we think we might be against the trend, we're going to snap that in pieces. We're going to have, half or maybe a little bit more than half of our normal risk when we think we're against the trend. Why is that? Because trades against the trend statistically will fail. It's the trades with the trend that will run. So we have to take these trades against the trend because the signals are often exactly the same. We can show you lots of price signals that are perfect to take, but they fail. This is one here. This is, let me bring over the highlighter for you again, which they call a spotlight. This bar here, this is 0920. You have perfect target recognition at the blue line. 153.15 is the blue line. 153.16 is this low. Perfect target recognition. The fast stochastic's oversold. You've got divergence on your proprietary momentum indicator. That makes it a buy. This is a buy on price. It was also a buy on time. The problem is when you move up here, this bar here, this is the one we were talking about, and I said trend is probably up that early in the move. By the time you get to the next bar, that's this fellow here, okay, 0925, Monday, September the 25th, trend is definitely up. So if trend is up, this is not a counter trend, this is the trend. Okay, whenever you're doing your analysis, the very first thing you put in is what is the trend. We have various ways of getting this trade. One of them is GMAG, which Sage is talking to me about and saying this is a standard GMAG entry. 3 bars up, inside bars null, avoid, carry forward the last signal. But it's a GMAG. Not many of you know GMAG unless you've done a tutorial, one of my earlier tutorials, in fact. But the minute you think trend is up, it's going to be very difficult to get a trade here because you don't have an overbought stochastic. You do have target recognition. This bar has a close of 154.28. Look at the red line, 154.29, one tick. But this was a hard to get trade. Very important you got it. And this was a TO3 plus signal this week. Nice stuff. Like it all. Like it a lot. In fact, we've just had absolutely fabulous trading. We normally take a week holiday every 3 months and get a break from it all and catch up with all your domestic chores. We haven't had a week off this year, Sage. We just go. And frankly, every time I promise myself or promise the family I'll take a week off, the trading's been so good I can't stop. I mean, it's just been super. We've just had great trading. Anyway, for those of you who want to be traders, like to learn to trade, do by all means start your free trial at the Daniel Code, which I'll tell you how to do in a moment. Start to learn from the trade signals. When you decide you want to be a super trader, you can do a tutorial. If you email me your phone number, country and location so I can get an idea what time of the day or night it is, I'll be happy to call you and discuss your trading and how I can take you from whatever level you're at now to be one of the greats. I've done this many times. Mike with us was I talked to you about a dentist from Chicago. He came to me. He was a very good trader when he came to me. He'd been trading a long time. And he loves it. He's dedicated, he made back his tutorial fee in. I forget what his quote was. Whether he said he made back his tutorial fee in the first 4 months after the tutorial, or whether he doubled his account in the first 4. Anyway, it's huge. He's a hugely profitable, successful trader. Sage, as I told you, one of our very best. Lots of others, doesn't matter if you know nothing, I can teach you. What you will need is determination and dedication. The rest I can tell you about. Albert's asking what the other cost, trade navigator, trade signal fee, subscription, etc. Shoot me a email, Albert, if you would, and I'll send you all of that information. Be delighted to, or else shoot me your phone number, tell me where you live so I can work out what the time zone is, and I'll call you and we'll have a chat. Okay, let's move on here. See what this is, folks, free trials. If any of you would like to have a free trial of the Daniel Code, just go to the website. There's a button there that says free trials. Just click on that, follow the prompts, email your username to Terry, and he'll at support@thedanielcode.com. He'll switch everything on for you. He'll switch on the TO3 and plus signals. He'll switch on the 4th and 5th seal. We can organize a free trial to Trade Navigator if you like, and you can learn all about everything that's important. Okay, so that's this is our compliance statement, folks. I'd like you to read this. Trading futures is risky, and if you don't know how to trade, if you're not very good at this, it's very risky. So do learn to trade. Don't risk real money until you're confident that you are a pretty competent trader. And I'd like you to always be aware of that, folks. Okay, so that's the end of end of our slideshow, and not sure what else I have for you here. So looks interesting. What have we got here? Okay, we're back on. I wanted to just, while we have a few moments, I wanted to just have a look at our 6-day S&P chart again. We haven't visited that for a while. Here it is. And as you can see, this is still just running beautifully up its Daniel Code trading channel. Who says markets are random? What a lot of rubbish. They're only random if you don't understand. This market's run perfectly up its trading channel. Let's have a look at the 12. Same thing here, probably even better, just as nice. And see where the next number 2493. Well, this closed at 2502. We've had a close outside. We're on our way higher. Pretty funny, this market, you know. I mean, I think there's a huge amount of emotion. There's a lot of hope and belief that we're going to get, or Americans, etc., are going to get tax relief. Australians will never get tax relief. It's against everyone's religion down here except mine. But our so-called right-wing party, they're called the Liberals. They're not. They're the Conservative Party. They're really the socialists in drag. There's no real difference between our political parties. They're both, in fact, all of them are incompetent, and they're all in favour of big tax and big spending. Not going to help us. But anyway, we look like we'll be headed up. We'll start looking, try and find some higher targets for you as the future unfolds. This is the US dollar index. Look at this. You've been seeing this chart for, well, years, really. I started showing you this back in 2014, and it's held this range beautifully. We've had this big rundown. We had support at this 91,520 number. We haven't had a close outside that yet. The daily members charts, of course, are much, much more accurate than this. For those of you who are following these markets, the DX, we had a great blue line buy signal right at the low. This low here, which was on September the 8th, the low of that bar was 90.795, and there was a blue line trade 90.735. We had a blue line buy signal there which started this whole thing off. Interesting. I'm not convinced that there's any strength in this rally, but don't forget, I don't know what's going to happen tomorrow or next week or next year. We don't have foreknowledge. So if I give you an opinion that I may think or not think, that's only an opinion until it's proved wrong. Okay, we've got a few questions here. Let's see what we've got to talk about. Summer trading in America, says Sage, always good. Albert wants to know about the other costs of doing a tutorial. Shoot me an email, Albert. Be happy to tell you. Chris, I've been working through the charts and following along multiple markets over the past week. This is absolutely amazing. Hi, John. Thanks, Joe. That's Chris. Chris has been doing a tutorial, and let me know when you're ready to move on, Chris, and we'll take on the next session. This is Akshay. This is my Indian friend who asked me about risk, and I said I'd do it, and I haven't. Thank you for some insight. Does it make sense to use the hourly chart? No. To enter trades which are against the trend or R chart. The point of entry only comes at the daily high or daily low, Akshay. You preempted me. Assuming the trade is elected, won't this reduce risk? Sure, one can probably miss some trades which won't correct after election day chart. No, don't get down into these hourly charts and things. If you think you're against the trend, use a fixed dollar level. So say I've been trading a lot of oil lately. It's about 1,500 a day is the average risk, from sell below the true low, buy above the true high. If you think you're trading against the trend, use a fixed dollar stop worth 50 or 59% of your normal daily risk. If you can, make it a trailing dollar stop. So if the market does move away a little bit, your stop moves with it. It's cutting down your exposure. What Jesse Livermore knew but didn't put into action is don't take big risk. Certainly the biggest thing about taking risk is you have to know what the trend is. If you don't know what the trend is, you can't make that assumption about what sort of stop you should be using. Okay, so this is Chris wanting to complete the sessions. Yeah, email you tomorrow, schedule our next session. Good. I'm committed to this in an absolute way. I think Chris likes this. It's pretty good. So did Mike. Yeah, Mike Murphy, we need to catch up, my friend. We all you guys, at the end of your tutorials, if you need more sessions, you're ready to talk to me about your paper trading, just shoot me a line. I'd be happy to talk to you. All right, folks, I think that's about it for today. Donnie Medell up in Canada. Hello, mate. It's getting very warm down here, Don. Beautiful sunny day, absolutely fabulous. Probably the second day this year, ready to head for the pool and the Bloody Marys, and might even go drive 2 kilometres and take a swim in the Pacific Ocean. It's marvellous. I guess it's getting cold where you are, my friend. Hasta la vista, Terminator. Thanks for being with us, folks, and look forward to having your company next time we do a webinar, which should be in 2 or 3 weeks. Thank you, and enjoy your weekend. My weekend is upon me nearly. It's 11:30 in the morning on Friday down under, September 29th. I placed all my orders, so I'm off the board here. Oh, Janet's having a nice day in Western Canada, 28 degrees C. Yeah, 32 here, Janet, equally nice. And Rose, glad you enjoyed it. I'm off the clock now, folks. My weekend starts pretty soon. And you have a safe weekend. Look forward to talking to you whenever the opportunity arises. Bye-bye for now.